Hello, it is the 11th of March 2011, and welcome to today's silver analysis, the silver log. And before I get into today's silver action, I want to send my condolences out to those whom are affected within the disasters in Japan regarding the earthquake and tsunami. It seems very clear that the earth is changing. We're going through so many transition periods. And when people talk about preparing as far as getting food, getting water, getting shelter, getting emergency strategies in place, this is the reason why. So if this does not affect you personally, it can at least be an eye-opener to say, okay, these things are happening. What can I do to prepare? You get the old saying, you can't eat gold or silver, which is true, but the only thing you buy, the only thing that you don't I'm trying to say this better. You don't just buy food, you buy many other things to go with it, silver being one of them for protection against the currency and to be able to get products at cheaper prices as the silver price increases and other things don't increase as much. Anyway, moving on to the action. This is the hourly candle chart and extremely volatile. Yesterday we came down this Fibonacci level. I'll put up the hourly line chart soon. But what happened was we came up to this point here. We really needed to find support here for this market to continue going further. It didn't do that. So what happened below here? Well, it seemed as if they were washing people out. And I mean wash out as in shaking people out. A lot of people having stops below this line. A lot of longs got stopped out of their, well, not really silver, but their paper markets, because SLV, any of that type of stuff, it's only a tool that tracks silver completely. Well, somewhat completely. But anyway, since this point, we are seeing massive movements. This is as of 1:42 p.m. Eastern, and markets just keep going higher. When we switch this up to the line chart, the significant Fibonacci levels for this high and this low are represented mainly roughly around 3509. I have the numbers written on the blog, but they're roughly in this areas around here. Regardless of the fact, there was no resistance here at this part here, because when you have this Fibonacci level in here, where you find support, which is normal, both bullish and bearish, this is normal. On a bullish case is that you find support here and go higher. Well, that didn't happen. On a bearish case, you go back below it again, which happens here, and you go below it. So that's bearish. So for it to stay bearish, you want to find resistance at this key level. That didn't happen, which makes this a failed move. Oftentimes, failed moves can bring a fast move in the opposite direction. Bingo. That has happened. The 5-day moving average, it was not resistance. Now ignore the fact that this is declining. If the market can continue to stay above this 5-day moving average, the 5-day moving average will continue to rise. And now we're at this point here. I don't think hardly anyone's looking at this resistance level, but everything that's supposed to be resistance is failing anyway. If we take a look at the previous resistance that we had in here, that's not a straight line, but this next one will be. If we take a look at the previous resistance that we had, once again, no resistance for the matter. So what's next? Well, we got resistance up along here. Will that be resistance? I don't know anymore. There's still 2-3 hours before the weekend market is going to close as of the recording of this video. And it's just getting very outrageous towards the upside. And this should mean that we at least have a test of this previous high here, whether that be later today or into Monday. And if this can hold very well, then that next target between 38 to 40 level seems as if it's a no-brainer to happen next week. But of course, it's always about adjusting to the message of the market as things change. And it was a big example here, because when you didn't find resistance in here, it was time to readjust towards what the message is trying to tell us. We've had our correction. We had first a correction through time, then a correction through price. and a move from 34 to over 36. This is over $2 since, well, just the last few hours of time. Now, to finish this off, I'm going to show the volatility. Still a work in progress chart, but this goes back to February, the last month or so. And what this shows is the difference of volatility on a high versus low period, the percentage moves. And this move we had here, that big candle, was this one in here, which was almost as big as the one that happened, I think it was on February the 8th. And this was a down move. This one is an up move, but the trend is showing volatility. It is Friday, which makes me believe, or not believe, sort of believe, but makes me think on a logical level that if this happens on a Friday moving into Monday, a lot of big things happen within this time frame. I wish I could be a fly on the wall for wherever the location is that is in the reason for why things are going higher, so I can understand better. But I don't. And you can look at the stories. Oh, this is going on in Libya. This is going on here. I don't believe that with a grain of salt. In fact, there's a video on my favorites. I'll put it on the blog too. It was from the big steel guy, someone who's in the zeitgeist movement, and he had put a video on from Russia Today that states that the oil movements is not really from Libya, it's from all the Wall Street bankers. So why the price is going higher? The only reason is because of the financial situation, the paper contracts. I don't know if it's because of short covering. I don't know if it's because of the COMEX contracts, but the news as far as what's going on within the world does not match what's happening in the real world. And just like to point that out. Thank you for watching and have yourself a great day. Bye-bye.